You know what time it is. It's the first of the month. That means we got to talk about the 3 stocks I am buying now. Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're talking about the 3 stocks I'm buying now. My favorite series of the entire month, the most popular series by far on this channel, guys. And let's just get straight into this. Leave me a thumbs up today if you enjoy these videos every single month, and leave me a comment if you want to tell me about the 3 stocks you're buying now. I would love to hear that, guys. So let's talk about this. So the stocks from last month, if you remember correct, are GoBroke, otherwise known as GoPro. That was the #1 stock. Then we had Apple. Then we had Wynn Resorts. So let's go ahead and review the performance on each of those stocks and kind of talk about what happened during the month, and then talk about what stocks I'm buying now, guys. So first off was the almighty GoBroke. They had another pathetic month, down 12% this month. Now, if there's one bright thing about down 12%, and there's really not any, it's that it was less than the last 2 months. But GoBroke is the worst stock I have ever bought in my life as far as the short-term performance of this stock. I have lowered cost basis several times, and I even posted a video in December about how I had went all in GoBroke. I went down in cost basis, went down in cost basis. I'm still down over 20% on GoBroke currently, over 20%. So I needed to go up over 20% just to break even on the stock. And then to start making money, I needed to go up a lot more than that. That's the worst performer. I've had other stocks go down 20%, but that's before I lowered the cost basis. The fact that I lowered cost basis so much on GoBroke, and it's still down over 20%, that shows you how pathetic of a short-term stock performance this one has done. But I'm a long-term holder, and we're going to talk about GoBroke. We're going to go into detail and the things I'm excited about and those kinds of things, guys. The second stock was Apple. Apple had a decent month. It was up just over 4%, so not bad, Apple. And then we had Wynn Resorts, which was a horrible performer. And this one took me completely off guard, down 19%. And this just took me completely off guard. Why it went down 19% is beyond me. Mostly good news came out of Macau and whatnot, so I'm very surprised. We're going to talk about Wynn Resorts, but I'm very surprised it had such a pathetic performance this past month. Now, that one had ran a ton going into, the last month or so. We're talking about this stock was a $49 stock back in, I believe it was February, March time. So it went up over 100% in basically a matter of 9 to 10 months, guys. It went up over 100%. So down 19%. It's a lot when you look at it from a month basis, but when you take into account that that one's up over 100%, the previous 9 to 10 months, 19% is like nothing of that, guys. So we're going to talk about all these. So let's get into this. So what's the #1 stock? You guys know it's GoPro. It's my biggest investment right now. I'm not funneling any more new money into it. I'm just holding my position just because I put so much money into GoBroke that I'm not willing to put any more. You get to a certain point where you're like, I'm so much into the stock that I'm not willing to put any more money, and that's where I'm at with GoPro. Now, does that mean I'm not confident in long term and all those kinds of things? No, I'm absolutely confident in long term. So we came off of the Christmas shopping season. I tracked Best Buy sales, I tracked Amazon sales, those kinds of things. I saw a very strong sell-through. Looking at this image here, we had a camera at 21. This is the best-selling products in electronics. This is overall electronics, guys. We had the 21, we had a 26, we had 27, and they had another camera that was usually also in the top 40. So they had many cameras all in the top 40, guys. That's freaking phenomenal. To have 3 cameras sets alone in the top 30 for most of December, that's mind-boggling, because we're talking about all of electronics section for Best Buy. Probably one of the most popular, the biggest online retailer and one of the biggest retailers overall. So when you can do that in electronics at Amazon, that's pretty amazing. So very strong sales. And then we go to just today, I just logged in and I saw what, GoPros are selling at. We got the Hero 5 Black, the main model. It's at number 21 bestseller in electronics, which means it's not just a Christmas type thing that people were buying GoPros for Christmas. It's actually gone up as far as the rankings go since, this is taken today, which is December 31st, getting ready for the January 1st release of this video. So 21, so I'm seeing very strong sell-through as far as all that goes. Now also, Best Buy, I tracked throughout December, and the day before Christmas, I went to check about tons of stores all around the country. So basically, you can go online through bestbuy.com. You can see the inventory of what Best Buy has for inventory for stores throughout the country. So I went to Manhattan, San Francisco, Austin, Texas, Phoenix, Arizona, Chicago, all these different places. What I found was around 30% of Best Buy stores either had 3 or less GoPro Hero 5 Blacks in stock. Some of them were completely out. So I look at that and I say, between the Amazon sales, between what I see from Best Buy, I see camera units strong. Now, that comes as no surprise to me. I expected camera units to be strong. We know this. Now, we'll see if that actually happens and what type of numbers they report here. Let's look at what the analysts are expecting for this quarter. They're going to announce here within about a month, guys. They're going to announce it usually right at the beginning of February. So, sales growth, analysts are expecting 35% if you look down there at the bottom. They're expecting around $590 million in revenue. That's versus $436 million the year before. So, I'm expecting strong growth. I would expect at least 20% revenue growth, but I'm expecting more toward a 40% revenue growth number. If they cannot at least get 20% revenue growth in this past quarter that was just completed, I was completely wrong with my GoPro prediction, 100% wrong, 100%. So if they don't grow at least 20%, I was 100% wrong, guys, because this is a quarter that's kind of got to turn the whole story on GoBroke around. Turn it from this is a dog stock. This is just they're in a declining business model. They can't move more camera units. They maxed out all those kinds of things to getting back to, oh no, they can still grow. They're growing. They've knocked out of the ballpark here. The one good thing about the Karma, if there's one good thing about the whole Karma drone not being launched in this quarter and the whole recall and whatnot, is that now the numbers we're going to see for this past quarter were strictly based upon camera units and camera accessories, which is what GoPro's business has been all along. So if they can show great growth in this past quarter for camera units and camera accessories, since there was basically nothing else as far as new products, as far as extra categories out there, that would be absolutely amazing if they can show, extremely strong growth. I'm expecting it. Analysts are expecting it. It's GoPro's chance to really show the world that, hey, we're back to growth. And then we got the new units coming on, the Karma Grip, which was hardly available in the December quarter. I'd be surprised if they moved $1 million worth of units, honestly. It was like, came out, I think December 1st they released it, but each Best Buy store only got like 2 to 4 units, and then they sold out immediately, and then GoPro didn't really even get to restock those channels or anything, so that's not going to really be baked in the numbers, but you're going to have that coming more into the springtime, and then eventually I'm guessing the Karma drone will come back on market, and hopefully, I'm not expecting as what I was expecting before because of the recall. I think that hurt. But still, if they can just show decent numbers, they don't have to beat DJI. That's what so many people don't understand. They do not have to beat DJI. They don't. If they can just be the second or third biggest drone maker, in the United States and Europe and whatnot, that's a huge success for GoPro because they're already the kings of the camera business. So that's that, guys. Now let's go ahead and talk about the next stock up, Wynn Resorts. So Wynn Resorts is the second stock I'm buying now. I'm funneling new money to Wynn Resorts. So let's go do a rundown here. So December 1st, we had Macau GGR come out at up 14% for November, the 4th straight monthly rise. That's a phenomenal number that came out for the month of November there. To be up 14%, that's huge, and especially when Macau for over 2 years straight was facing declines, and some of these declines were huge. We're talking 20, 30+% declines. When you get back to growth, you get 4 straight months of growth and a 14% growth. That's phenomenal. So that's really good news for Wynn Resorts. I'm surprised Wynn didn't move up huge on that number, but it didn't. Then we go ahead and look. This just came out a couple days ago. Macau December gross gaming revenue tracking at 5% growth. Now, 5% growth, yes, that certainly is down from 14%, so that's not a good sign as far as, is that going to continue on? Is that going to get worse and worse? And the next thing you know, we're at 0% the next month, and then we're back to negatives. That's kind of the worry there. Personally, I look at it and I've seen these numbers, I've tracked them for years and years, and they go up and down, they fluctuate. Sometimes a really good month like November, sometimes not as good a month. The fact is, it's growth. It's growth. It's still 5% growth in the end. Do I think this is a longer term trend where Macau is going to keep going on the decline? Absolutely not. If that does happen, then I definitely have to worry about my Wynn position, because then that could be a position that's back at $49 or something like that. I'm not expecting that. I'm expecting to stay in the growth mode. If it's 3-5%, it's 3-5%. I'm a long-term holder in Wynn. I believe a lot in that stock, a lot in that stock. Then we go ahead and we look at, this was some bad news. This was some legit bad news here. Baccarat Wynn was down 23% on the Vegas Strip in November. Wynn is the biggest Baccarat player by far on the Strip. It's not even close on the Las Vegas Strip. They dominate the Baccarat game. So this directly affects Wynn Resorts more than any stock out there. So it's kind of painful, but then when you take into account the growth that we saw in November in Macau, maybe Wynn just got bigger numbers in Macau and a little less numbers in Vegas. A 23% down quarter for Baccarat games for Wynn Resorts means a lot less when you have a 14% up month in the month of November in Macau. Because Macau, they get way more revenue from. It's not even close. You know, Wynn gets 70+% of their revenue from Macau versus Vegas. So you can run the numbers on that, and it's still a win-win for the Wynn at the end of the day. And then we go ahead and look here. Table games was also down on the Strip, 4.2%. Slot machine on the Strip was down 2.7%. So basically, total gaming Wynn on the Las Vegas Strip in November stood at nearly $517 million, down 3.5% from a year earlier. Basically, it just wasn't a strong month for the Las Vegas Strip. Why that is, I don't know. I don't think anybody really knows. It could be many different factors in there, guys. Then we look at Wynn Palace. Wynn Palace is now going to report its first full quarter in business. Wynn Palace is the resort it's the main reason I would say I'm invested in Wynn. I love all their other current properties, but this is the one that can propel them to the next level of growth. We're going to finally see their first full quarter in action. I think this has a great chance of being the most profitable resort in the entire world. In order to be that most profitable resort in the entire world, we got to see some great numbers out of Wynn Palace for this quarter they've been in here. And if we see some great numbers, then it can be well on its way to tracking to be that most profitable resort in the entire world, guys. So that's basically where we are at with Wynn. So what's the third stock I'm buying? There's no third stock I'm buying now. Now, that's like mind-blowing. Mind-blowing. Because that means this is the first time ever in my investing career that I have not felt comfortable enough in investing in any other company right now than those two companies. Now, there's been times I've only held one stock or two stocks before, right? There's been times, but that wasn't because I didn't want to invest in any companies. That's just because I like certain companies better than others. So I wanted to funnel more money toward company one and company two. This is the first time that if I didn't have Wynn Resorts to invest in, if I didn't have GoPro to invest in, I wouldn't invest a dime right now. I just look out there and I'm like, every stock I practically track, it's way overvalued in my opinion. So I'm just not comfortable investing in stocks if I feel they're well overvalued. Now, you're probably wondering, wasn't Apple your third stock? Yes, but I'm going to talk about now why I kicked Apple out of the three and why I'm not buying Apple anymore. And let me make it very clear before I get into this. I'm not bearish on Apple. I'm absolutely not bearish on Apple. I don't think Apple's going to $90 or $80 next year or whatever. I'm just not comfortable investing in Apple for some following reasons we're going to go into here, guys. So, these are numbers that came out of basically the past week. So Apple activations are a good sign, Flurry Analytics estimates that Apple grabbed an impressive 44% of mobile device activations from December 19th to December 25th, more than double the 21% that Samsung grabbed over the same time frame. You might think, wow, that's amazing. Apple's doing amazing. They're dominating. Absolutely, they're dominating. But then when you look at what happened a year ago, maybe not so fast. While Apple's activations are a good sign, they're slightly less than last year when Apple grabbed 49% of device activations. So we see here, guys, that device activations are actually down year over year. They had 49% market share, 49% the previous year, and then they only had 44% this year. So that's a trend that's getting worse. That's one reason. Then we had this come out this past week. Apple could slash iPhone production 10% in the first quarter of 2017, reported on Friday, citing calculations based on data from suppliers. Nikkei reports that iPhone 7 has sold more sluggishly than expected, drawing a parallel to last year's iPhone 6, which piled up in warehouses due to oversupply. This is a huge worry, guys. Apple gets over 70% of their revenue from iPhone. When you have these type of reports coming out, when you see iPhones are going down, those kinds of things, guys, you worry a lot that can Apple get back on growth. This is iPhone 7. This is their main device. This is not a 6 device. This is not a 6S. This is not a 5S or 4S or any of those type of devices. This is a 7. This is their flagship launch. And we see these type of reports coming out, and it's like, what is going on, Apple? You get so much of your revenue from this product line, and we just see declines now coming. What does that mean for your business model overall over the coming years? Are you going to be able to grow, or are you just going to be in stagnation or declining business model? Then we had the Google Pixel launch this past quarter. A phone that has been reviewed as the best smartphone of 2016 by several sites. TechnoBuffalo is one of the main ones that called it the best smartphone of 2016. I've seen nothing but amazing articles written about, amazing YouTube videos from some of the biggest tech reviewers that love the Google Pixel. And I see so many big tech YouTubers actually using the Google Pixel as their main phone now over the iPhone. So I look at this and I say, this is interesting because this is Apple's first main competitor as far as a company that has the brand name, so they have the hardware, they have the software, and they have the whole ecosystem around it. Google's always had Android, and they've always been in these other devices, but they've never had the hardware. They've had the hardware as far as having it under other names like, I can't even remember what the crap they used to call those other names or whatnot. But the fact now that they have the Google hardware, Google software, and it's all branded Google, I think that's really big, guys. I think that's really big. And the fact that it's had the reviews it's had, that it's just been amazing, that makes me fear that they're going to steal a teeny bit of market share away from Apple slowly over time. Now you might say, okay, a little bit of market share here and there. What is that? Well, when Apple is expected to barely have growth next quarter and next year on iPhones, if Google's just taking a little bit away, that might keep iPhone in decline. From reporting maybe a 2% growth or a 3% growth, if then all of a sudden they're experiencing a 1 or 2% loss, that just keeps the fundamentals in investors' mind that they can't grow. They're just in decline, in decline, in decline. That could not mean good things for Apple stock over the long term. Then you have what came out in the last quarter. Apple reports its first annual revenue decline in 15 years as sales for the iPhone continue to shrink, and Wall Street freights that the world's most valuable company doesn't have a game-changing new product to revive its revenue growth. So this is the whole story on Apple. Now, there are some things I'm excited about as far as Apple goes. The low PE ratio, that's great. A PE ratio of 13, 14, that's phenomenal. The dividend, they have so much cash on the balance sheet. Apple has a lot of good things going for it. But when your main product cannot grow, and that's what I'm worried about long term, that the iPhone cannot grow, and you have iPad units have been going down for 2+ years. That's their second biggest product line. And then their third biggest product line is Mac, and I think they really screwed that one up with going with the whole touch bar and whatnot and getting rid of the ports, or you could see those rants by everybody. I will not be buying a new MacBook Pro. So you see, iPhones are in decline. iPads are in decline. They screwed up the Mac product line by getting rid of all the ports and by adding a stupid touch bar that just made it way more expensive that people don't really want. And I say, how is Apple going to grow over the long term? How are they going to do it? Yes, you have a great very low PE ratio. Yes, you have a great balance sheet. Yes, you're extremely profitable. Yes, you're the most dominant electronics company right now. But over the long term, how can you make this into a $1 trillion market cap? How can you do it? And that's what worries me, because they're at a $600-something billion market cap right now. And I say, how do they get to $1 trillion? I don't see how they do it, guys. And if they got to $1 trillion, it's only 80% growth. I don't see how it could happen over the next decade. Maybe it could, based upon just people buying the stock for valuation purposes or something like that. But as far as growth, how do they get there, guys? Do you have any ways they can get to that $1 trillion market cap? Because I do not. And for that reason, I'm not investing in Apple anymore. I'm not bearish. I just want to make myself very clear. I'm not bearish. I don't think the stock's going to $80 or something. I'm just not comfortable putting money in a stock that their number one and number two product lines are in decline. I'm not comfortable doing that, guys, and I don't see those things changing anytime soon. I hope you guys enjoyed this 3 stocks I'm buying now video. Leave me a thumbs up if you enjoyed it. Leave me a comment on what stocks you guys are buying now. Leave me a comment on if you guys think these are good stocks to buy now, or if you're already invested in them, if you're going to invest in them, those kinds of things. I would love to hear from you guys. If you just came across this channel and you've not subscribed yet, you may want to. We talk personal finance on the channel. We talk entrepreneurship. I'm a business owner. I give a lot of my business tips out. And we also talk the stock market the most in this channel, including this series we do every single month. Thank you guys and have a great day.